This is MacroVoices with hedge fund manager Eric Townsend, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
Well, Patrick, let's get on to our very natural post-game chart deck. Listeners, you'll find the download link in your Research Roundup email. If you don't have a Research Roundup email, just go to our homepage, macrovoices.com, click the red button that says Looking for the Downloads. Patrick, page 2, S&P 500, what are we looking at here? Is it turning around?
Well, I just put on that 50-day moving average because it seems to have been a pretty good arbiter of trend. And we had such a strong rally that it diverged away. And now this pullback has brought the market right back down to that 50-day moving average. I also drew a red line of where the 50% retracement lies, which conveniently is right around that round number of 4,000. And the way that I kind of look at this chart is that even if we did temporarily break to 4,000 and break poke below the 50-day moving average, if this was just a correction in a new rally, we should see the bulls use any weakness down into that area as a buying opportunity, and we should see the bulls quickly turning up the chart out of there. It would be a sustained breakdown below those levels where I feel that there would be the real signs of technical damage that could really start to drive selling, where we could see volatility start to rise up again and see the natural feedback loop that comes into weakness that creates that big downside volatility. I don't think that's here yet, but we're slowly approaching kind of the line in the sand areas where the bulls will really have to hold the line. So it's certainly something to watch into next week.
Speaking of lines in the sand, a lot of dollar bears have said that 109 or 110 would be a red line in the sand that the dollar couldn't move above. What do you think of this chart on page 3?
Well, I want to look at page 3 and 4 together, where I have the EURUSD on there. And let's just first put context of page 4, which the euro has broken to a lower low. And more importantly, that lower low was from parity. And so we've now actually seen for the first time in decades that euro across this kind of parity Rubicon. And while the dollar has not made necessarily higher highs, maybe it's because the yen hasn't yet been able to make that big burst. The entire currency markets, cross currencies, are all very, very weak. And the US dollar remains the dominant trend right across the entire cross-currency spectrum. And, if for whatever reason this was a top, there is no indication of it yet. At this moment, respecting the dominant prevailing trend is the only reasonable proposition at this stage. And while, it obviously has a huge psychological bearing, and a lot of people talking about whether the euro should be bought at these levels, at this moment, it would not be a shocker for me to see another 2-3 cents trimmed off of the euro as it goes to 96 or 97 cents on the downside. At some point, it's going to get oversold enough where it's going to turn, but I don't think that moment is here yet. With that said, Eric, let's move on to crude oil. And I have that chart on page 5 and really showing an interesting pattern, which is when we broke down here in August, we broke to a lower low, but just temporarily, almost like just anyone that had stop losses just sitting below a previous low just to get nicked or something. But what's interesting is that the reversal has been strong enough to now make a higher high. And so we have this pattern that over the months of June and July, oil was perpetually making lower highs, lower lows, and a very pronounced downtrend. And we're for the first time seeing signs that at least some sort of a base is in. To me, it's going to be all about clearing some key hurdles. If crude oil can make its way back towards 100 and then not make lower lows where the price action really starts to show signs of accumulation, it might be a sign that this 2+ month correction in crude oil, which was more or less about a 50% retracement of the entire year rally, it might be turning up. And that's certainly something to watch, because I think that overall your bull narrative is bang on. It's about just identifying when technically the trend has shifted. And maybe these are the first signs right before we start seeing more bullish price action.
Well, Patrick, I agree completely, and of course it's also data dependent. What we were looking at this week, although you can barely see it on that sort of doji-looking candle there from Monday on your chart, is it was looking over the edge of the abyss and about to just drop farther as the Iran nuclear deal came together, and then the trend reversed in an instant on the Saudi statement that this would mean OPEC might need to cut production in order to compensate. So, let's wait till there's the next news event to come out and reverse the tape hard in the other direction and see whether or not we can resist another lower low. I think the market probably can, but that's going to be the test, is when some bearish news hits the tape, pushes us down to a lower number, is it lower than the low that's already been put in back in August? And I think that's the big test that's coming up.
Now, page 6, I have the energy stock ETF, the XLE. And what I wanted to do is just give my interpretation. And since you know this market a little bit better than I do, you can tell me whether you think my thought exercise is on the right track. But what we obviously have seen is a pretty significant correction at the front of the curve of crude, where on the term structure, those front month spot prices, where we saw the correction. But it's led to relatively just simply a flattening of the backwardation. But overall, when you go farther out, oil has not really dynamically changed outside of the front of the curve. And really, when you talk about energy stocks, they tend to price oil into the future as opposed to just trading based on spot. And one of the interesting elements is that these energy stocks have actually already started to bull. They've already been running. They've didn't care that crude oil was stuck in the mud or even making lower lows. They just started to accumulate. And even during this entire stock market pullback over the last week, energy stocks just kept making higher highs. There is some clear bullish price action. And obviously, Warren Buffett contributed to this as he took a larger stake in OXY, which has had a large number of copycats going into this entire space. But certainly energy stocks seem to be getting some pretty good tailwind here.
Well, Patrick, I trade the commodity, not the stocks, so I don't really have a viewpoint on the energy stocks, but it doesn't surprise me. They're starting to perform, and that certainly stands as further evidence of the turnaround that we seem to be seeing in the actual crude oil chart. Let's move on to uranium on page 7. What is going on with that gigantic candle, it looks like 2 days ago?
There was that announcement that Japan is firing up its nuclear plants again, and certainly was used as a huge sentiment shift for the uranium market, which was stuck in the mud. When you look at the entire space of energy in terms of coal and natural gas and oil, so many of these markets have been doing so well, and it was really there was uranium that was stuck in the mud throughout this entire period. And this news lit the match underneath and has brought it back to life. One day doesn't make a new trend, but it's going to be really interesting to see whether the bulls can build on this. And it wasn't just uranium. In this case, I'm using that Sprott Physical Uranium Trust as for the chart, but also uranium stocks using that Uranium Miners ETF, URNM, which also, after consolidating, creating a right shoulder, it also bullishly broke out. A very early breakout. One day doesn't make a new trend, but it's certainly on my radar to see whether or not uranium gets things going here.
Patrick, let's move on to page 9 and natural gas futures.
Yeah, well, here we have a market that's been bulling for all of July and August, and it really it is attempting to break to new highs. I mean, not only did we approach $10, but we broke to higher highs in the sequence. Now, it did pause here, but still, this trend is very clearly still bullish, and there is no evidence whatsoever here that this is already topped or reversed. It'll be really interesting to see whether nat gas can work its way up to $11 plus on this push. It has been one of the far more bullish markets out there.
Listeners, if you enjoy Patrick's chart decks, be sure to check out pages 10 and 11 in the chart deck, where you can find information on a free trial of Big Picture Trading, Patrick's trading service. Or you can just go to bigpicturetrading.com.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the Internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at MacroVoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.